On the 20th of November 2024, BlackRock, the world's largest asset manager, quietly submitted an S-1 filing to the SEC for the iShares Silver Trust, a physically backed silver ETF. Most people didn't notice. It wasn't splashed across headlines, but it immediately grabbed my attention. BlackRock oversees about $10 trillion in assets, and they don't launch ETF filings just for fun. The last time they went down the commodity ETF route, Bitcoin, things moved fast after approval. In January 2024, the iShares Bitcoin Trust was approved, and then we saw what followed. Bitcoin ran from around $46,000 to $18,000 over 11 months. That's roughly a 135% move in under a year. Institutional capital poured in more than $36 billion in year one alone based on Bloomberg data. Now the target is silver, and I can't stop asking why now. What is BlackRock seeing that the broader market is ignoring? My working theory is that something meaningful is building beneath the surface in the silver market. And if the Bitcoin playbook repeats itself, we could be staring at one of the largest wealth shifts the commodity space has ever seen. Let me walk you through what I uncovered, because by the end of this video, you'll understand why I think we're still in the early innings of something big. Quick disclaimer, I'm not a financial advisor. This isn't financial advice, and I'm not connected to anyone mentioned here. This is educational analysis based only on publicly available information. I've studied institutional behavior for years, and one pattern keeps showing up. When BlackRock makes a move, markets tend to respond not because they're magically smarter than everyone else, but because $10 trillion carries real gravitational pull. When they filed for a Bitcoin ETF, plenty of people doubted it. Crypto was viewed as speculative, risky, not institutional grade. But BlackRock appeared to see a different narrative: scarcity, fixed supply, and a form of digital gold. They filed in June 2023, and approval arrived in January 2024. After that, the gates opened. Pension funds that couldn't buy Bitcoin directly suddenly had a regulated pathway through an ETF. Financial advisors who weren't allowed to recommend crypto could now allocate it inside portfolios. Sovereign wealth funds, endowments, family offices, new categories of capital gained access, and according to multiple reports, the iShares Bitcoin Trust attracted roughly $36 billion in its first year. Bitcoin's market cap expanded from roughly $900 billion to above $2 trillion. Silver is a different asset, but the mechanism is similar. The structure is essentially the same file for a physical-backed ETF: get SEC approval, unlock institutional access, and let demand meet a constrained market. And this is where it gets interesting and honestly a little concerning. Silver's market is far smaller than Bitcoin's in the places that matter. For context, Bitcoin's market cap sits around $2.1 trillion right now. Gold is near $18 trillion. Silver, about $1.7 trillion total. But here's the key point: only around $50 billion of above-ground silver is considered investable based on industry estimates. That's it. That's the entire pool. So, when BlackRock files an ETF that could attract tens of billions, possibly more, into a market with only about $50 billion of investable above-ground silver, the math turns serious very quickly. This is what I call an asymmetric opportunity: a relatively small market, enormous institutional demand, and real-world physical limits. It's a perfect setup, and I think BlackRock understands that. Now let me lay out the four-stage pattern I've been tracking, because major commodity bull runs tend to follow the same sequence, and in my view, silver has just moved into stage 3. Stage 1 is what I call institutional preparation, when smart money positions long before the crowd even realizes something is happening. For silver, that preparation has been building quietly for years. Reports suggest that from 2020 to 2023, central banks worldwide bought more than 1,000 tons of gold per year. But alongside that, something important shifted in silver. According to Silver Institute data, industrial demand rose by roughly 15% from 2020 to 2024. Solar panels, electric vehicles, 5G infrastructure, AI data centers, these all consume silver, and there's no scalable substitute. Meanwhile, mining output stayed fairly flat. Some reports indicate production has fallen around 2% since 2020 due to declining grades and lower exploration spending. That's the setup: demand pushing higher, supply staying tight, and institutions paying attention. Then you have players like JP Morgan. According to various market analysts, they've reportedly accumulated somewhere between 600 million and 1 billion ounces since 2011. I can't confirm the exact figure, but COMEX data does show they hold major positions in registered vaults. The bigger question is, why would a bank build physical silver exposure for more than a decade? In my view, it's because they see what might be coming. Stage 2 is regulatory positioning. This is when institutions build the legal and structural on-ramp that allows large pools of capital to enter the asset. That's what BlackRock's filing represents, the S-1 submitted on the 20th of November 2024. According to the filing, the iShares Silver Trust would hold physical silver bars and fully allocated vault storage. Each share represents a specific amount of silver, not just paper exposure, not derivatives, but real metal. That matters because the existing silver ETF SLV includes some notable language in its prospectus. It states, paraphrasing, that under certain conditions, settlement could occur in cash rather than physical silver. For big institutions, that's a potential concern. They want reliable physical exposure. BlackRock's structure appears designed to deliver exactly that: full physical backing, transparent vault reporting, and institutional-grade custody. And here's where it gets even more interesting. The SEC review process often runs about 75 to 240 days. If BlackRock filed on November 20, that places a potential approval window anywhere from early February to late July 2025. My guess is somewhere around Q2 2025. April through June. Why that timing? Because that's also when markets have been pricing in possible Fed rate cuts. Rate cuts often weaken the dollar, and a weaker dollar has historically been supportive for commodities. The timing may be intentional. Stage 3 is market recognition, when the wider market begins to grasp what's developing. And in my view, we're stepping into that phase right now. Silver reached roughly $32.50 per ounce in early December 2024, up from about $20 in early 2024. That's around a 41% year-to-date gain based on market data. But here's what most people overlook. The real move likely hasn't started yet. So far, it's mainly technical traders and retail silver bugs driving the buying. If BlackRock's ETF gets approved, that's when institutional capital can begin flowing in pension funds, with mandates to hold 5% in commodities, sovereign wealth funds looking to diversify away from dollar-heavy assets, endowments searching for inflation hedges. These are not small pools of money. Some estimates put global pension assets above $50 trillion. If even 1% of that finds its way into silver through a new ETF, that's $500 billion of potential demand chasing a market with only about $50 billion of investable above-ground supply. That's the imbalance. There simply isn't enough silver. Let me use Bitcoin as a reference point, because the supply side is what keeps me up at night. According to the Silver Institute, global silver mine production in 2023 was about 822 million ounces. Total demand, including industrial jewelry and investment, was around 1.1 billion ounces. That implies a deficit of roughly 280 million ounces. So where does the shortfall get covered? Above-ground stockpiles, recycling flows, and at times, government reserves being sold. But the issue is simple. Those stockpiles aren't endless, and they're being drawn down. COMEX registered silver, the metal available for delivery, has been reported around 113 million ounces as of late 2024. That sounds large until you realize it's only about 10% of annual demand. If institutional buying through a BlackRock ETF absorbs even 50 million ounces, that's close to half of COMEX registered inventory. What happens to price when supply tightens like that? History offers a hint. Go back to 2010 and 2011, the last major silver bull run. Silver climbed from roughly $17 per ounce in late 2010 to about $40 by April 2011. That's around a 188% surge in roughly 5 months. What drove that run? A mix of factors cited in market analysis at the time: QE2 from the Federal Reserve, a weaker dollar, rising investment demand, and most importantly, supply constraints. But here's the key difference today. Back then, there wasn't a major institutional ETF serving as a pipeline for pension fund scale money. It was mostly retail demand and some hedge funds. This time, if BlackRock's ETF is approved, you're talking about the possibility of tens of billions in institutional capital with physical silver as the end destination. And the supply backdrop may be tighter now than it was in 2011. Industry data suggests mine production peaked around 2015 at roughly 900 million ounces a year. It's been flat or trending lower since then. At the same time, industrial demand has jumped because of the green energy transition. The International Energy Agency projects solar capacity could triple by 2030. Each gigawatt of solar needs roughly 20 to 25 kilograms of silver. Run the numbers. We're talking about hundreds of millions of additional ounces of demand over the next 5 years. Where does that silver come from? That's the question no one seems to be answering. Stage 4 is what I call the pricing dislocation. This is when the market is forced to reprice the asset to match a new reality. For silver, I think that moment arrives when BlackRock's ETF goes live and institutional buying starts. Here's how I'm thinking about potential price targets. And I want to be clear, these are speculative projections based on historical patterns and current market dynamics. Nothing here is guaranteed, but let's walk through the scenarios. Conservative scenario silver follows a similar percentage move to Bitcoin after ETF approval. Bitcoin rose roughly 59% in the first 3 months post-approval. Silver at $32.50 plus 59% puts us around $51.50 per ounce by summer 2025. That would line up with silver's 2011 high of roughly $49. Moderate scenario, institutional inflows create sustained buying pressure similar to Bitcoin's first-year performance. Bitcoin gained about 135% over 11 months post-ETF. Silver, at $32.50 plus 135%, gives approximately $76.50 per ounce by late 2025 or early 2026. Aggressive scenario, a real supply squeeze emerges as industrial and investment demand collide. This is where it gets serious. If you look at silver's historical ratio to gold, it has averaged around 601 over the past decade. Gold is currently around $4,200 per ounce. At a 601 ratio, silver should be roughly $70. But in bull markets, that ratio has tightened. In 2011, it briefly hit 301. If gold stays near $4.100 and the ratio compresses to 401, that implies $102.50 silver. If gold climbs to $5,000, as some analysts project, and silver hits 401, that's $125 per ounce. I'm not making predictions here. I'm showing the math using historical relationships. What actually happens depends on a long list of variables. Fed policy, macro conditions, geopolitics, industrial demand, and investor sentiment all matter. But here's what I do know. BlackRock doesn't file ETFs they don't expect to succeed. They have a track record. Bitcoin showed the model can work. And the silver market is far smaller and more physically constrained than Bitcoin. The setup is in place. The catalyst is approaching. The real question is timing. So when does the SEC approve it? Based on historical timelines, this is what I'm watching. The SEC has 45 days to deliver initial comments on the filing, which would land in early January 2025. After that, there's typically another 45 to 75 days for further review and a potential approval decision. That puts the earliest plausible window around February to April 2025. But the SEC can stretch the review out to 240 days in total. That means the latest approval could land in July 2025. My base case is still that we see a decision sometime between March and June 2025. Why? Because the SEC already set the precedent with Bitcoin. They approved 11 Bitcoin ETFs in January 2024, including BlackRock's, so the regulatory runway is already there. Silver is also arguably less controversial than Bitcoin from a regulatory angle. It has traded as a commodity for decades. There's already an ETF structure in the market with SLV, and BlackRock's filing likely anticipates the SEC's main concerns. I don't see an obvious reason for long delays, but that's simply my interpretation based on how these processes have played out before. Here are the signals I'm watching that approval could be getting close. First, SEC comment letters. When the SEC starts issuing detailed feedback, it's a sign the review is active and moving. Second, amendments to the S1. If BlackRock submits updated versions responding to SEC questions, that's forward progress. Third, approvals of similar filings. If another issuer gets a silver ETF approved first, it can create a clear pathway for the rest, including BlackRock. Fourth, the timing around Fed decisions. If the Fed starts signaling rate cuts in early 2025, it's possible SEC approval could line up with that to support market stability, just a theory. And fifth, silver's own price behavior. If silver starts climbing hard before approval, that could be smart money positioning ahead of the headline. Right now, silver is consolidating around $32 to $34. But if we see a sustained move above $35, especially with heavy volume, I'm paying attention. Here's the convergence I'm seeing. BlackRock files for a physical silver ETF check. That happened on the 20th of November 2024. SEC review process underway, check. Expected approval window around Q2 2025, check roughly 4 to 6 months from that point. Silver supply deficits continue, check. The Silver Institute has confirmed ongoing shortfalls. Industrial demand is accelerating, check. Solar and EV output is ramping worldwide, check. COMEX inventories remain relatively tight, check, with registered silver around 113 million ounces, down from higher levels in prior years. Markets have been expecting possible Fed cuts in 2025, check. Gold at all-time highs, check, near $4.200 per ounce. Bitcoin ETF success proving the model, check, with about $36 billion in first-year inflows. All of these factors are pointing in the same direction. To me, that doesn't look like coincidence, it looks like convergence. And convergence tends to create momentum. So what does this mean in practical terms? I'm not here to tell you what to do, that's not my role. But I can tell you what I'm tracking. I'm watching SEC public filings for any updates on BlackRock's application. I'm watching silver's price action, especially whether it can break and hold above $35 per ounce. I'm watching COMEX inventory data. If registered silver starts dropping sharply, that's a supply warning. And I'm watching institutional positioning. If major funds start adding silver miners or existing silver ETFs, that could be front-running a BlackRock approval, and I'm watching the Fed too, especially if they start signaling rate cuts in Q1 2025. That would create a very supportive backdrop for commodities to appreciate. The key point is that all of these are public data points and anyone can track them. Here's how I'm thinking about timing. If approval arrives in March or April 2025, you probably have a 2 to 4 month window to get positioned before institutional inflows really show up. If approval comes later, June or July, you may have more time, but you also run the risk of missing the early momentum. The Bitcoin ETF episode taught us that front-running the approval can be profitable. Bitcoin climbed from about $46,000 in December 2023 to over $49,000 by early January 2024, before the ETF even launched. Smart money was already leaning in. I think something similar could be happening in silver right now, around $32 to $34. We might already be in that pre-approval positioning phase, but I could be wrong. Markets don't follow scripts. What I do know is this. The BlackRock filing is real. The supply deficit is real. Industrial demand is real. And the approval process is underway. Whether that ultimately translates into $50 silver, $100 silver, or $150 silver, I don't know. But the setup is there, and opportunities like this don't appear very often. One more thing, risk, because it's not all upside. What could go wrong? The SEC could deny the application possible, though I think less likely given the Bitcoin precedent. A recession could reduce industrial demand, also possible. If solar and EV production slows, silver demand could cool off. The dollar could strengthen sharply, possible. If the Fed doesn't cut rates, or if geopolitical dynamics boost the dollar, commodities often struggle. A major discovery or a rapid production jump possible, but unlikely in the short term because new mines take years to develop. Substitution technology possible over the long run, but I haven't seen scalable alternatives that would materially replace silver yet. These are real risks, and I'm not brushing them aside. But when I weigh the downside against the upside, the risk-reward still looks favorable in my view. Especially if you're thinking in a 1 to 3 year horizon rather than trying to nail every short-term swing. Here's my working expectation: approval lands sometime in Q2 2025, let's say April, for the sake of argument. And then the launch follows within weeks, similar to how the Bitcoin ETF timeline played out. Institutional buying begins. Pension funds, wealth managers, and advisors start allocating. Call it $10 billion in the first 3 months, a conservative figure compared with Bitcoin's $6 billion. That $10 billion would need to buy physical silver at $35 an ounce. That's roughly 286 million ounces. But remember, annual mine production is only about 822 million ounces, and a large portion of that goes straight into industrial use. So you'd be trying to pull roughly 35% of yearly mine output into investment demand in just 3 months. That's how a squeeze forms. Prices rise, let's say, to $45 or $50. That draws attention. Retail investors jump in. Momentum builds. Media starts covering it. Silver prints new highs. More money follows. Then prices push to $60, then $70. At that point, you've basically doubled from current levels. That's the moderate scenario playing out. The aggressive scenario is when supply truly can't keep up with demand. If COMEX inventories drop below 50 million ounces, and if physical premiums spike the way they did in 2020, then price could dislocate $100 plus, maybe even higher. I'm not predicting that. I'm saying it sits within the range of possibilities when you run the supply-demand math. This BlackRock filing isn't just another ETF. It's institutional validation of silver as an asset class. It's the on-ramp being built so the largest pools of capital on Earth can access a relatively tiny market. And if the Bitcoin story taught us anything, it's this. When BlackRock builds the structure, the money tends to follow institutions, inflows, and momentum. We're roughly 4 to 6 months from a potential approval window. Silver is sitting around $30 to $34. The setup is obvious. The catalyst is approaching. The only real question is whether you're paying attention. I'm not a financial advisor. I can't tell you what to do, but I'm watching this closely because, in my view, this could end up being one of the biggest commodity stories of 2025. If you want to follow along as this develops, hit subscribe. I'll be tracking the approval process, the price action, and the institutional flows, everything in real time. Do you think the BlackRock Silver ETF gets approved in Q2 2025? Drop your thoughts in the comments. I'm genuinely curious what you all think. This might be one of those moments where everything changes. And you heard about it here.